Investors and traders, welcome to the channel. Market chart pattern today is 10th of March 2025. Hope everyone is having a good day. So we will be reviewing the key US markets, and we'll start by taking a look at the stock indices. Most notably, we'll take a look at the NASDAQ 100 cash and the futures, and also the S&P 500 cash and the futures, and Russell 2000. The markets have been under a lot of stress. The Nasdaq 100 index closed for the third consecutive day below the 200-day moving average. So we'll talk about that. As always, the video is for educational purposes only, and it is not a financial advice. So yesterday I put out a video in which we are looking at that after a long extended period of time, if the market NASDAQ 100 closes below the 200-day moving average for the first time, and then we in the next 10 trading days or 2 weeks, the market trades declines more than 4%, and then we have seen actually much deeper declines later on. So that back testing was of course done on historic data, and the hindsight is 2020, so things are a little bit easier to do. So this is the first time we are doing this on the live data, and we have something really interesting happening today on the cash index. The S&P, the Nasdaq 100 was down 770 points today, which is about 3.81 percentage points. And here I'm using this as the 200-day moving average start, and if we uh, extend this to where it closed right here, then we are a little bit below the 4%. But if we actually take the exact lows, the lowest point, then it was above the minus 4.79%, so a little bit above the 4%. So if we just go by the closing basis, so it just gives it a little bit of a benefit of the doubt, so we still remain under the 4%. And I think over the next course of 9 more trading days, we should begin to get a much clearer picture. But something really interesting also happening right here is that this is the decline that we had back in August. So remember, this is the carry trade, the Japanese yen, and if we just project this, then we pretty much completed this. But in the S&P 500, we exactly did this move. So that's the market symmetry concept. We haven't broken these levels yet to the downside. So in this uptrend, this one remains, the level remains in terms of absolute declines. And then also we have a situation that we have the 1.618 expansion coming right around here of this entire decline. I had the 1.272 expansion of this move around here. We saw a 1 day rally but just fizzled out, and we have a 50% of the April lows. And let's see if we have some ratios from the August lows. So maybe around 61.8% retracement. There we go. So the market actually went and touched the 61.8% retracement to the tick right here. So we have a number of things. So maybe we get at least a bounce or even a rally, and then we'll have to look at the quality of that rally. It is possible we get a really fantastic rally, but we'll have to wait and see how strong the rally is. And then of course our 38.2% retracement of the entire decline comes around 20,400. So this will be a really key level. It's also just very close to the structural resistance right here. So now I think things are lining up. I thought maybe last Friday, the way the market closed, we might actually begin a rally. But of course, Monday proved to be otherwise, and it's just gone into these levels. And so many of these indices are making these that it's really really fascinating to take a look at these harmonics coming together. And here we have here we go. This is the weekly chart. And here what I would like to emphasize is we had the ABCD one-to-one projection completing right around here. We have this move lower into the August, roughly from memory. I think we have the 1-to-1 projection right here, and then of course the market extended, and the 1.272 times the AB comes roughly around 23,175. So let's call it 23,200, and the market made a high of 22,222, so missed it by about 1,000 points, which sounds like quite a bit, but this is something which is trading at 22,000. So you just take a percentage and see it just missed it quite narrowly, in fact. And now look at this channel. The market has been rising in this CD leg, really nice channel, really nice trend support right here, and the market actually seems to be, let me just get this a little bit out of the way right here. Seems to, although the week is not over, but it is definitely testing the lower boundaries of this channel right here on the weekly chart. Now, if we take a look at the futures, we have a similar kind of picture. So in the futures chart, I have drawn it a little bit different. I've drawn it as a wedge formation, and you can see that this is the same CD like a trend line. The market is actually poking below it. Of course, the week is not closed yet. And then this is the same August 5th August 5th decline right here. Uh, 8th of July to 5th of August. Yeah, there we go. And again, we missed it. If you take the percentage, the exact high of the D point, we missed it by a fraction. So, this is how powerful these patterns are, and we have seen a fair decline thus far. And if we take a look at the S&P 500 cash, here, one point I would like to point is that this trend line, which has been going on since 2020, so about 5 years ago, it's still intact. If we have a bear market which extends, then this is likely to get tested. But right now, let's take one thing at a time, and let's just focus on this ABCD. So this is the black ABCD going back all the way to 2020. It completed right where the top has come in, and you can see that this is the weekly chart. For a number of months, the market has gone nowhere. On the daily chart, I had some targets that if the market around here look quite strong, that maybe it can poke up above 6,300. It hasn't done that thus far. These ABCD patterns are proving to be pretty resistant. But now, what the market has done is, let me actually blow it up like this. So we focus on this CD leg higher, and this is the biggest decline that we had, which is basically from the 11th of July high to the 5th of August low, and the market has actually made that symmetric move. And further, if I just expand it like this, I think I've got it on the daily chart, so I'll just move it to the daily chart really quickly to make it easier to see. There we go. So we have got the 1.618 expansion as well. So let me actually move to the daily chart. There we go, and here we can see that this is our symmetric move right here in the S&P 500 cash daily chart. We also have the 1.618 expansion, and we have a retracement as well. So let me try to move it like this. So the retracement is coming from this move in the 6th of September. And then if we take this low, which is really important, 5th of August, 61.8% is nearby, and it was the exact one in the case of NDX cash. Let's take a quick look on the ES, similar kind of picture, and that's the 5th of 5th of August low. This is the 61.8% retracement, and nearby, and the 50% will be around here. Let's also draw that. Oops, there we go. Yeah, there we go. So yeah, this is the point where I think we could expect a rally to happen. Same thing, we'll have to take a look at the quality of the rally, and then of course the 38.2% retracement. Market could easily rally up to this point. where we have the 200-day moving average as well. And I think from here around the 5800 level, we should begin to see if it is really trending, strong trending market. The market should not go much above than the 38.2 and 50% level. So that's 5800 to 5870. That's where I think a lot of resistance will come. Once we begin to get a deeper retracement into 61.8% to 78.6%, then that means that this move actually is getting weaker. So we'll wait and see. Now there's quite a high probability that perhaps we could see a pretty decent a rally take place, and we'll be watching the quality of the rally. Really, something really interesting is actually this Russell 2000, because it completed this ABCD. This is one index which had not done that when we were doing our previous analysis. It has actually done that ABCD, so really interesting to see that. So again, another index at this key pattern level. And then let's take a look at the Dow Jones. It took out these lows. Could it be a double bottom? We'll have to wait and see. But this index looks pretty weak. So this is what we are looking at in the indices, and let's take a look at the New York Stock Exchange Composite Index as well. Boom, it found some support from the 200-day moving average because it contains ADRs as well as some of the foreign stocks, such as the Chinese stocks. Alibaba has done pretty well since the beginning of 2025. Yum Brands, which is also a Chinese restaurant stock, has done really well over since 2025. So this is why we are seeing more strength in the New York Stock Exchange Composite Index, which is really important to see because we also want to have a look at ADRs listed on the New York Stock Exchange. Now let's have a quick look on the dollar index. So as far as the equities are concerned, it looks like we might have seen the markets being really oversold and getting to those harmonic levels. I think most likely we could see a turnaround Tuesday where the markets could rally. We'll have to watch the quality of the rally and those 38.2% retracements really carefully. So this one has it's really weak. Let me actually move to the weekly chart. Here we go. And there we go. So look, it even broke below the 89 week average. Of course, the week is not closed. Last week was, yeah, not a good looking week. This, I think we might have seen some sort of a top in the dollar as well. And here we go. It's right at the point where we have the 61.8% retracement. Remember, this is the gap formation that I had drawn. It has filled the gap. Maybe we could expect a rally as well in this. I'm just going to clean up the chart a little bit. I've got so many things. Look, this was the pattern that I had drawn. Long-time subscribers will know. And things look really good for the dollar, but boom, it's just come down massively. And on the flip side, if we take a look at on the Euro USD, here we go. I think Euro is at a level. It's just gone sideways, but if it begins to close below the 61.8% retracement, this is where we can see actually at least a pullback in the Euro. And let me actually draw the expansion. Yep, so 1.618 is slightly above that. It is in that ballpark figure. Price action wise, just sideways. But if it begins to close below these, one of the lows of these candles, then we can see a pullback. Now, if we take a look at the British pound, so the British pound right at the 61.8% retracement, and let's see if we have expansion of this. And there we go, slightly above that, but I think the 61.8% is capping it. We could see at least a slight pullback. Now the British pound is strong, and if it were to retrace, Let's draw the entire 38.2% retracement. It could retrace to about this point, which is pretty significant move to the downside, but it could do it in an ABCD fashion, which will make this point a really interesting buy point. Do whatever you want to, but could be a low risk entry point. Now let's take a look at the yields. So this is the TNX, and the yields actually, there was a bit of a spike in the yields, but the yields I think the yields will continue to move lower, which is going to be really interesting. Maybe it's also related to flight to quality, other than what is going on with the federal budget being cut, with the cuts of Doge to reduce the deficit and stuff. um, but that is also one of the things. So yeah, 3 day rally, and I think we'll have to see if this rally is very similar to this rally. No, not quite, but came pretty close. Yeah, looks like we could see the yields move lower, which should help the stocks, but it could also be a flight to quality. And if we take a look at this 2 year, look, just range bound, but I think we are, after having this triple top, this is the kind of top we had in stock market. We could be in this CD like lower, much lower. Now let's take a look at the ZN, which is the futures. Yeah, so here we go. It's just range bound right here, but it does look like there is strength. It may continue higher. I think the yields are likely to move lower, and the bond, long bond futures also, maybe they just continue higher as well. I think we have this trend line right here. There we go. So this is what we are watching in the key US stock indices, and also the currency markets, dollar, and the bond market, and a very quick look at the gold. And it looks like the gold, this pattern right here, we had you can see the pattern that we have drawn here. I'm not gonna repeat what it is. It might be doing something like this, which is like it's like H formation, and maybe this is just a retracement that we saw, and we could be in an ABCD, which could see it move lower, maybe around here. Let me get rid of this. Okay, so looks like it's got a further downside, like this. So maybe it is in this kind of a structure, could move right into this structure, right into around 2800, 2810. So we'll have to wait and see. But the gold has also gone sideways, pretty much very close to when the stock market actually put in, some of the indices put in a top. So thank you very much for watching the video. If you want to support the channel with your donations, that will help me with some overheads, such as the subscription for TradingView. Also give me a chance to do more research and present it to you guys. And then please do click the link which I will be posting in the description. It's a Stripe link. You'll be able to donate to the channel, whatever you want to donate. I will really appreciate that. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.